Welcome to Bunnex Investment Group. In this video, we are going to talk about an easy scalping strategy that will make you lots of money if done properly. We'll go through everything we need to know pertaining the points of entry as well as timing. So time is actually a very important element in this particular strategy. But before we go through, make sure you subscribe to this channel and check out the notification bell icon if you haven't done so that you won't miss any of our videos as we upload. So we are going to explain this strategy in 4 parts, right? We are going to start on bias determination, how to determine the bias of the market. Then 2, the intraday bias. After attaining the market bias or the market direction, we'll need the intraday bias for that particular day. Then session changeover entry, which is the point where we are now going to execute or pressing the buy or sell option. Then we have chart examples. So make sure you stick to the end of this video so that you have these chart examples. So the first topic is bias determination. And this is a process of checking for the market context. Are we going up or are we going down? There are several ways of attaining this, from swing highs or swing lows like this. Having swing lows like that, it will mean that we are in a downward market context, and having swing highs like this, it means we have an upward market context, or the quarters theory. So the quarters theory is actually a very deep topic that will require actually a separate video. So in our case, we use the market maker levels to attain the bias. And for the purposes of this video, we'll dwell on the bias determination using the H1 time frame market maker levels. Therefore, our bias for this particular video will be actually derived from the H1 market maker levels. So to do this, one will need to locate the peak formation high or peak formation low. By that, it's basically probably a high of the previous week or a high of the current week, depending on which one is actually holding as the PFL or the PFH. In that case, we are meaning you need to actually determine the peak formation high or the peak formation low that you are viewing on the charts. It's basically the highest point and the lowest point within the cycles. So bias will always be the direction away from the peak. So we will be trading away from the peak in this particular scalping strategy, as shown in the next example. So let's actually have an example on that. The first thing, as I've said, is actually to locate the peak formation high like that. Then after locating the peak formation high, in this case, we would say our bias is in a downward direction, right? So all the trades that we are going to take will be focusing on the downward side. So on the charts, this is how it will look like. This is the peak formation high or the peak high from the previous week or the current week. It all depends on which part is actually a peak. So a peak is something that can be determined either by the previous cycle or by the current cycles. You may actually learn more about this stuff in our upcoming class that is coming on the 28th to the 30th of June this month, and we'll actually talk more about these things. So in this case, our bias is this one. This is our bias from this arrow, and that is how we determine the market bias or the market direction, right? So after locating the H1 time frame bias, we now need the intraday bias, which is the daily market direction, right? If counting levels or determining the peak or the market bias on the H1 time frame, you may actually focus on the intraday bias, whereby you just go to the intraday time frame, which is the M5 or the M15, right? So in our case, we use the M5 since we are actually scalping for this particular strategy. So the intraday bias is simply obtained by checking the log of the high of day or low of day. And an HOD or LOD log, high of day or low of day log, is basically an intraday 1350 EMA crossover, meaning in layman's terms, we are saying M5, right? M5 1350 EMA crossover will actually give us that daily market bias or that intraday market bias, meaning the bias for that particular day. So 1350 EMA crossing 50, sorry, in this case we are saying 13 crossing 50 upwards means the bias is up, and vice versa. By vice versa, we are saying 13 crossing 50 downwards means the bias is down. So in doing so, we respect the last crossover before any session changeover, right? As we all know, we have the Asian session, London session, Asia, London, and New York session, right? The period between these two sessions, right? In between these two sessions, there is a period that we refer to as a session changeover. It's a period whereby the market makers are actually exchanging shifts. So within these periods, that is where we actually call the session changeovers. So we have an indicator that can help us to actually locate these periods on the markets, right? So after determining our intraday bias, it's now time for entries. And entries are made during the session changeover in line with the intraday bias. So to have a guide, our trades will be 50 EMA retest in line with the intraday bias, but during the session changeover, right? We are saying the first thing, this is the Asian session, right? After that Asian session, we get a 50 1350 EMA crossover like that, right? Mind you, this is an M5 chart. Then after that, we need to see a retest of this 50, but during during a session changeover, right? So a session changeover indicator may be used to spot the times easily on the charts. Let's see how this works on the next examples. So here's the example one. We have our M5 chart, right? The first thing is to determine the intraday bias. Intraday bias, how is it obtained? The last EMA crossover of the 1350 EMA before any session changeover, right? In this case, this blue box is actually marking the Asian session. Then these gray boxes are marking the session changeover periods, right? So the first thing is to see the intraday bias, which is by seeing a 1350 EMA cross, 13 crossed below the 50 EMA, then we can see the market come back to the Asian, to the 50 EMA during a session changeover. Sometimes it may happen outside the session changeover box. We need this to happen during the session changeover period, right? Then we can see the market actually going down. So our entry may be below candle closure below the 13, and as a scalp trade will take probably 12-15 pips against half the number of the target pips on the stop loss side, right? So we had cross, pull back to the 50 during the session changeover, candlestick closure below, or even retest of the 50 to enter the market and scalp a few pips. Let's have another example. In this case, we had cross, right? A flow of the market, retest of the 50, entry, scalp, and out, right? Cross, retest of the 50 during the during the session changeover, which is this box, and enter. In this case, we had our bias last crossover before session changeover, cross, flow, retest of the 50 during the session changeover period, and scalp, right? So it's one, then 2 session changeover period, 3 retest of the 50 EMA and enter, right? In this case, the last crossover before a session changeover was the one to give us the bias 1. All right, small flow, retest of the 50, 2, and scalp, right? Like that. So basically, it's a very, very easy way of scalping the markets. And as I said earlier on, that if done properly, you can make a lot of money out of it. On that note, we come to the end of this video. Thank you for watching. Like and subscribe, and check out our free Telegram channel, which is this link that I'll put in the description box below. See you on the next one.